Hello guys, how are you? Welcome back to my channel. So you may notice that there are not that many stocks right now where you could make a good investment decision or a trade, but sometimes there are these special occasions, or when some stocks go down and you see a really good opportunity and you can't miss, especially if those companies are good companies. So in this video I'm going to show you 4 stocks I am buying right now that I believe are going to make me some money in the future. Now these companies are really well known. I am sure you heard about them. They have a good record and I believe they're gonna be here for a long time. So with that being said, these companies are mainly value companies, and what I like about these companies is that they also pay a really good dividend, which is going to be part of my dividend portfolio. And well, let's just get into the numbers and show you why I think these companies are great. So let's begin. Alright guys, so we're going to start with Coca-Cola. Yes, this is one of Warren Buffett's favorite stock. As you can see, Coca-Cola has been going down recently, 11.49%. And usually when this happens, this is a good buying opportunity. As you can see, it has a 25.14 P ratio, which is a little high, but in this market, this ratio is alright. Has a really good dividend yield, 3.38%, and I see a good opportunity on this stock. As you can see, now they are also starting to sell Coke with coffee. This is interesting. I am actually going to try it and see how it tastes. It should be good. And this company is really good. It's known, it's been around for a long time, and it's really reliable. So let's look into the report. Alright, so this is the report for Coca-Cola. As you can see, the 12-month and 5-year are buys, and more than likely Coca-Cola is gonna go back to $58 per share or even higher. And as you can see here, it says, we believe that earnings probably bottom in the second quarter of 2020 and should continue to improve as economies reopen and consumers return to restaurants and eventually amusement parks and sporting events. That's true. Remember, COVID-19 is not gonna last forever. So this company is going to be doing great soon enough. And as you can see, the target price is 58. Let's look at the balance sheet. Look at that. The revenue is right. Now the net income, especially in 2019, is being higher, so that's pretty good. And the return on equity and assets are decent, so that's a good sign. The current ratio is also good. Now, and the debt to equity ratio is alright. So as you can see, this company is a value company. And other companies that you might want to look into are Pepsi. As you can see, it also has a buy rating. BUD also has a buy rating. And then some growth stocks, as you can see here, are Monster and BUD. So that's pretty much it for Coca-Cola. Alright, the next one is Verizon. As you can see, recently also Verizon has been going down 10%. However, this company is really good. It's a value company, and as you can see, the P ratio is only 12.91. The dividend yield is amazing, 4.52%. And it's interesting that it's down today because, as you can see here, their earnings report, they did really good. So sometimes that happens. And as you can see, Verizon's bet with Disney is paying off. So that's a good sign. Let's see the report. Alright, as you can see on the report, the 12 and 5-year rating are buys. And the target price for this stock right now is 68. So that's a good opportunity there. And as you can see here, it says we are maintaining our buy rating with a target price of 68. We think the COVID-19 pandemic and lockdown response have resulted in highly defensive consumer behavior, freezing wireless industry competitive dynamics even more than usual. However, the fourth quarter in 2020 launch of the iPhone 12 may open up the industry to renewed competition in 2021. Upgrading to a new phone is a golden opportunity for carriers to poach customers in the highly penetrated US. Because of this reason, I think Verizon is going to be recovering soon and doing better. That's why I am also buying it. As you can see, the dividend is good. And all this, the financial strength is alright. And the PE is okay, is good. Now let's look at the balance sheet. Revenue. As you can see, the revenue has been increasing since 2016, so that's a good sign. Net income. The net income, they have some red years, but recently they have been doing good. Now let's go see other companies. When it comes to growth, T-Mobile or T-Mobile is doing great. That's also a good company. And as you can see, they are all buys here. But for me, the one that I see more value and a better opportunity right now is Verizon. The next one I am buying is Lockheed Martin, LMT. Yes, as you can see, this company has been going down a lot, 16%, which represents a buying opportunity. Look at that PE, it's only 13.5, that's really good. Dividend yield is also good, 3.14. Market cap is 92.51, so that's good. Now, it has made some profit, but it's bidding on sales. So eventually this company is going to recover. I mean, let's be honest, the US spends a lot of money on defense, and this company is going to recover soon, and believe me, it's gonna fly. Let's look at that report. Alright, as you can see in this report, the 12 and 5-year rating is also a buy, and pretty much as you can see here, it is a buy because it's a leading company in one of the US economy's core competency industries, aerospace and defense. The company has consistently delivered positive surprises to the street in recent years, regardless of whether defense spending is rising or falling, or the White House is occupied by the Republican or the Democrat. Lately, government spending on certain segments of defense has picked up, a trend we think is likely to continue. And of course it's going to continue. As you know, the US is the country that spends the most on the military. So, with that being said, this company is also a good opportunity right now. As you can see, the target price is $4.50, and right now it's really low compared to that price. So let's look at the balance sheet. As you can see, revenues have been increasing as well each year, so that's a really good sign. And let's look at the net income. There we go. They are also been making money. That's also a good sign. Alright, so other companies similar to this one. As you can see, Boeing is also there, which is also a buy. As far as growth, LMT is my favorite, so that's why I decided to buy this one. Okay, let's go to the next one. Alright guys, and the last one, but not least, is Merck, which is a pharmaceutical company. And let's be honest, pharmaceuticals are killing it lately, but in some occasions you get this rare buying opportunity. As you can see here, this company has gone down 9%, and it has a PE ratio of only 17 at 195.39 billion market cap, so that's good, and a dividend yield of 3.37, pretty good. Now the reason why it's going down is, as you can see here, Merck shuts down COVID vaccine program after lackluster data. So pretty much they were thinking to prepare or make a COVID-19 vaccine, but they decided not to do it anymore, and that's why it's going down. But at the end of the day, this is a good value company, and I think this is a great opportunity to buy it. So let's look at the report. Alright, look at that. The 12-month, 5-year and sector rating, they are all green, buy, overweight. So that's a really good sign. As you can see here, the target price is $95 per share. So that's really good. Now let's see what the investment thesis is. So as you can see, it's a buy with a price target of 95. Despite near-term headwinds from COVID-19, Merck is seeing sequentially stronger end market demand for its products as physician offices reopen, elective surgeries resume, and pet owners return to veterinary offices. The company continues to see strong sales of Keytruda, Lenvima, and Lynparza. Expanded indications for these oncology therapies are driving sales growth. Merck is also adding to its pipeline through innovative acquisitions such as its transaction with Velovio. So those are some of the reasons why this is a great company. Let's look at the balance sheet. Look at the revenue. It's been increasing also year over year, so that's also a good sign. Net income, they have been making money, especially back in 2019. They have made a lot more than in prior years, so that's really good. The ratios, as you can see, they are also decent. And let's look at some of the peer and industry analysis. As you can see, there are a bunch of other pharmaceutical companies. Like Pfizer is also another one that is one of my favorites, but not at this point. So because of that, right now my favorite is Merck, which is a value company, as you can see. Now if you want to focus on growth, you can go to ABT or LAY. Good companies as well. Alright, and that's it. Alright guys, so as you can see, these companies are great, and right now they are in like a good price, reasonable price to get in. Of course, if they keep going down, I plan to buy more because I am investing for the long term, and these companies on the long term are going to be really good. And as I mentioned, they also pay a good dividend, they are reliable, they have a good record, and they will last for a long time. So I don't think they are gonna go bankrupt anytime soon. And it's just in some occasions they go on sale, and these are the times to take advantage and buy them. So with that being said, thank you for watching. Don't forget to subscribe and hit the thumbs up. Alright, well, hope you have a good day or night. Thank you.